I need you to do something uncomfortable right now. I need you to think about every silver prediction you've heard in the last 2 years. Silver to 200 by summer. The squeeze is happening this month. COMEX is about to default. They can't keep this up much longer. You've heard these dozens of times, maybe hundreds, from channels with millions of views, from analysts with decades of experience, from voices so confident they made you feel like an idiot for even questioning them. Now I need you to do something even more uncomfortable. I need you to ask yourself, how many of those predictions actually came true? And here's the question that should really keep you up at night. How many of those creators ever came back? Ever looked you in the eye and said, I was wrong. Here's what I missed. Here's what I learned. I've been watching silver content for years. I've tracked the calls. I've bookmarked the videos. I've gone back 6 months later to check the receipts. And I discovered something that changed everything for me. Almost nobody tracks their predictions. They make the call. They collect the views. They move on to the next crisis. And if the prediction fails, they just pretend it didn't happen. They memory hole it. They bury it under 17 new videos about the next big move. And you, the person who trusted them, who maybe made decisions based on what they said, you're left holding the bag. You're left wondering why you believed them. You're left questioning your own judgment instead of questioning theirs. I'm not going to do that to you. This is the Stack Guy. And today, I'm going to tell you exactly how I'm approaching silver analysis on this channel, and why the single most important thing I do is something almost nobody else in this space is willing to do. I track every prediction I make, publicly, permanently, with full accountability. And by the end of this video, you're going to understand why that matters more than any price target I could ever give you. Stay with me. This is important. Let's talk about something I call the prediction treadmill. It's a pattern I've seen over and over again in the world of online silver analysis. And frankly, it's destroying the community's trust. Picture this. It's January 2024. Silver is trading around $23 an ounce. A prominent silver analyst, a big name, releases a new video. The title is something like, Silver to $50 by March. It's a bold call, super specific. The thumbnail has rocket ships and explosions. It's designed to grab your attention. And it works. The video gets hundreds of thousands of views. The comment section is on fire. People are excited, they're sharing it, they're getting ready for the big move. Fast forward to March. Where's silver? It's at $24. It moved up a whole dollar, but that $50 target? Not even in the same galaxy. So what does the creator do? Does he make a follow-up video explaining what went wrong with his analysis? Does he admit he misread the market? Does he update his model based on this new reality? No, of course not. He just drops a brand new video. Silver to 60 by June. Here's why it's different this time. June rolls around. Silver makes a nice move up to $29. That's a significant jump, but it's nowhere near the $60 promise. So what happens next? You guessed it. Another new video. Another even bigger prediction. Another breathless explanation for why this time, finally, the stars have aligned and the rocket is on the launch pad. Rinse and repeat. For years. This is the prediction treadmill. And it's how a lot of financial content works, especially on YouTube. Let me break down the formula, because it's pretty simple. Step 1, make a huge attention-grabbing prediction. The bolder, the better. Silver to $100 is always going to get more clicks than a reasonable take like, silver might gradually appreciate over the next 18 months. Nobody wants to click on that. It's boring. Step 2, use incredibly urgent language. You've heard it before. This is happening now. You have days, maybe hours to prepare. The window of opportunity is slamming shut. This language is designed to trigger your fear of missing out, your FOMO. It creates panic. It drives engagement and makes people share the video with their friends, spreading the urgency. Step 3, this is the most important part. When the prediction inevitably fails, and let's be honest, statistically, huge, short-term predictions almost always fail. You just ignore it. You never mention it again. You just move on to the next video, the next prediction. The reality is, the audience has a short memory. Most people won't go back and check your track record. Step 4, cherry pick your wins. On the rare occasion that a prediction gets close, or silver does have a random spike for a week, you make sure everyone knows about it. You shout it from the rooftops. I told you this was coming. I called it months ago. You highlight the one time you were right and completely bury the 10 times you were wrong. Step 5, repeat this cycle forever. It's a content machine that runs on hype. And look, I get it. I really do understand why this happens. The incentives on platforms like YouTube are completely broken. The algorithm rewards drama, urgency, and extreme claims. A measured, nuanced analysis of the silver market structure just doesn't get promoted like a video screaming, COMEX default imminent. Get your physical metal now. The creators who scream the loudest get the most views, the most subscribers, and the most revenue. The careful, responsible creators often get buried. But what does this broken incentive structure produce? It produces a community that is completely lost, a community that has no idea who to trust. I talk to silver stackers all the time, both online and in person. And you know what I hear more than anything else? It's a sense of confusion and frustration. I hear things like, I just don't know what to believe anymore, or everyone says something different, who is right? But the one that really gets me, the one that's truly tragic, is this. I've been burned by so many of these predictions that I've just stopped listening to all of them. That's the real damage, because there are genuine signals in the silver market. There are times when the data really does shift in important ways. There are moments when paying close attention could genuinely help you make better, more informed decisions about your own stacking strategy. But if you've been listening to people crying wolf for years, if every single video is presented as a world-ending emergency, nobody's going to believe you when an actual wolf shows up at the door. All that credibility has been burned away. And we, the entire community, are all worse off because of it. Now, I want to be extremely careful here. I want to be very precise about what I'm criticizing and what I'm not. I'm not saying that everyone making silver content is a grifter or a charlatan. That is absolutely not true. There are some fantastic analysts in this space who do genuine, high-quality research. People who care deeply about accuracy and are sincerely trying to help their audience navigate a very complex market. And I am definitely not saying that being wrong about a prediction makes you a bad analyst. Everybody is wrong sometimes. I've been wrong. Anyone who has ever made a market call has been wrong. Markets are incredibly complex, dynamic systems. Unexpected things happen. Being wrong is not the problem. The problem is being wrong without accountability. The problem is making these bold, sensational claims, collecting all the views, and the ad revenue that comes with them, and then just pretending it never happened when reality doesn't cooperate. The problem is a system where you can fail publicly over and over and over again and face absolutely zero consequences for it. In fact, you're often rewarded for it. I've been keeping notes. I've been quietly tracking the specific predictions made by various channels over the past year and a half, and the pattern is stark. It's undeniable. I found one channel that made 14 specific price predictions over a 12-month period. And I'm not talking about vague directional calls like silver will go up. I'm talking specific price targets with specific timeframes. Of those 14 predictions, 11 were completely wrong. Some were off by a small margin. Others were wrong by an enormous margin. Guess how many follow-up videos there were explaining the misses? 0. Guess how many times those missed predictions were ever mentioned again in subsequent videos? 0. But you know what that channel did mention repeatedly? The 3 predictions that actually came close. Those were brought up again and again. As I said back in March, if you've been following this channel, you knew this rally was coming. This is textbook selection bias in action. This is how you manufacture the illusion of being an accurate guru while actually being wrong most of the time. And the average person watching doesn't know any better. They see the confident delivery, the slick editing, the big subscriber count. They see the cherry-picked wins. And they naturally assume, wow, this person must really know what they're talking about. I've seen the same pattern play out across channel after channel after channel. With some minor variations, the prediction treadmill is almost a universal business model for financial influencers. The silver community deserves better than this. You, as someone trying to make smart decisions for your future, deserve better than this. And that's why I'm trying to build something different here. Something based on data, transparency, and accountability. It's a slower, less sensational path, but I believe it's the only way to rebuild the trust that's been lost. Thanks for listening, and I hope you'll stick around for what's next. Every prediction I make on this channel will be tracked, publicly, transparently, and permanently. No hiding, no memory holing, no pretending the misses didn't happen. Let me show you exactly how this works. I've built a prediction tracker. It's a public document. You can access it anytime. I'll link it in the description of every video, and it contains every specific falsifiable prediction I make on this channel. Let me walk you through the columns because the structure matters. Column 1, date. When did I make this prediction? Not sometime last month. The specific date, the specific video, timestamped. You can go back and watch the original context if you want to verify. Column 2, the prediction. This is the actual claim. And it has to meet a specific standard. It has to be falsifiable. What do I mean by falsifiable? I mean, it has to be possible to prove wrong. Silver is going to do well this year is not a prediction. It's a vibe. What does do well mean? If silver goes up 2%, did it do well? If it goes up 20%, but you expected 50, was that doing well? It's impossible to evaluate. Silver will close above $35 at least once before March 31st. That's a prediction. It's specific. It's measurable. On March 31st, we can look at the data and definitively say whether it happened or not. I will not make vague predictions on this channel. If I can't make a claim specific enough to be proven wrong, I won't make it. This is a discipline that most silver content lacks, and it's a discipline that forces me to be more careful with my words. Column 3, time frame. Every prediction has an expiration date. When will we know the answer? This matters because the vague prediction game often involves moving goalposts. Silver to 100 sounds bold, but if there's no time frame, you can never be proven wrong. Silver could hit 100 in 2045, and technically, you were right. Time frames create accountability. They force me to commit to a specific window, and when that window closes, we evaluate. Column 4, confidence level. This is something I've never seen another silver channel do, and I think it's crucial. Not all predictions are equal. Sometimes the data is screaming at me. The patterns are clear. Multiple indicators are aligned. I have high conviction. Other times, I see something interesting, but there are complicating factors. The signal is muddier. I have a view, but I'm less certain. I'm going to be explicit about this distinction. I'll use 3 levels, high confidence. I've done extensive research. The data strongly supports this view. I'm putting real weight behind this call. Moderate confidence. The data leans in this direction, but there are factors that could disrupt the thesis. This is my base case, but I'm watching for contradictory signals. Speculative. This is a scenario I'm considering, not a firm prediction. I think it's possible, maybe even likely, but I wouldn't be shocked if I'm wrong. Why does this matter? Because when you evaluate my track record, you should weight these differently. If I make 10 high confidence predictions and get 8 right, that's meaningful. If I make 10 speculative calls and get 5 right, that's expected. I told you up front that those were uncertain. This prevents me from hiding behind false modesty. I can't make a bold claim, then later say, well, I was just speculating when it doesn't hit. The confidence level is locked in at the time of the prediction. Column 5, result. What actually happened? Did the prediction hit or miss? By how much? This column gets filled in when the time frame expires, and it gets filled in honestly, even when the answer is painful. Column 6, analysis. This is the most important column. When a prediction resolves, whether it hit or missed, I write a brief analysis of why. What did I get right? What did I get wrong? What did I learn? For the hits, was I right for the right reasons, or did I get lucky? Did the outcome happen the way I expected, or did it happen through a different mechanism? For the misses, what did I miss? Was there data I ignored? Was my model flawed? Was the thesis right, but the timing wrong? What would I do differently? This is where the real learning happens. This is where I get better over time. And this is where you can see whether I'm actually thinking critically or just generating content. Now, let me tell you why this system changes everything. When you know your predictions are being tracked publicly, you become more careful. You do more research before making a call. You think harder about what could go wrong. You don't throw out wild numbers just because they'll get clicks. The tracker creates a selection pressure for accuracy. Bad predictions have consequences. Not financial consequences, but reputational consequences. They sit there, publicly, forever. They can't be hidden. This is the accountability that's missing from most silver content. And here's what else it does. It builds trust over time. Right now, if you're new to this channel, you have no idea whether to trust my analysis. You're going on vibes. Does this guy seem smart? Does he seem honest? Does he tell me things I want to hear? But 6 months from now? A year from now? You'll be able to look at my tracker and see actual data. You'll be able to calculate my hit rate. You'll be able to see how my high confidence calls compare to my speculative ones. You'll be able to evaluate whether my analysis is actually worth listening to, based on results, not charisma. That's calibrated trust. Trust that's earned, not assumed. Trust that's based on evidence, not vibes. And if my track record is bad, if I'm wrong more than I'm right, then you should stop listening to me. Seriously. If the data shows I don't know what I'm talking about, you should unsubscribe and find someone better. The tracker gives you the information to make that decision. I'd rather lose subscribers because my track record is visible than keep subscribers by hiding my failures. That's the deal I'm making with you. Radical transparency in exchange for your attention. Let me get specific about why this accountability system actually helps you. Because I know what you might be thinking. Okay, this guy tracks his predictions. That's nice. But what does it actually do for me? 3 things. Thing 1, it helps you calibrate how much weight to put on my analysis. Let us say I make a prediction. Silver will break $40 in the next 60 days. High confidence. If you have no track record to reference, you don't know how to interpret that. Is this guy usually right when he says high confidence? Or does he throw around high confidence on everything and miss half the time? With a public tracker, you can answer that question. You can look at my historical high confidence calls and see, did they hit at a higher rate than my moderate confidence calls? What's the actual percentage? If my high confidence calls hit 80% of the time, you should probably pay attention. If they hit 50% of the time, you should be more skeptical. I'm apparently not as good at identifying high conviction opportunities as I think I am. The tracker gives you the metadata you need to evaluate my analysis. It tells you not just what I think, but how reliable my thinking has been historically. This is enormously valuable, and you're not getting it anywhere else. Thing 2, it protects you from false confidence. One of the most dangerous things in this space is analysts who are wrong but sound certain. Confidence is persuasive. When someone tells you this is definitely happening with conviction, it triggers something in your brain. You want to believe them. You defer to their certainty. But confidence and accuracy aren't the same thing. Someone can be supremely confident and completely wrong. A prediction tracker exposes this gap. If someone sounds certain all the time, but their predictions miss constantly, you can see it. The tracker reveals whether confidence is warranted or whether it's just performance. This protects you from making decisions based on false confidence. It protects you from mistaking charisma for competence. Thing 3, even my failures become valuable. Here's something counterintuitive. My wrong predictions might be more valuable to you than my right ones. Why? Because when I'm wrong, I analyze why. I write up what I missed. I show you the factors I underweighted, the data I ignored, the assumptions that didn't hold. This is educational. You're not just getting my conclusions. You're getting insight into the analytical process. You're seeing how silver markets can confound expectations. You're learning about the pitfalls and blind spots that trap analysts. Over time, you develop better judgment yourself. You're not just following my calls. You're building your own analytical framework by observing mine. This is the difference between giving someone a fish and teaching them to fish. My wins give you a fish. My losses, transparently analyzed, teach you to fish. Now, let me address the obvious objection. Doesn't publicly tracking your predictions create an incentive to be less bold? Won't you just make safe, boring predictions that are easy to hit? Fair question. Here's my answer. First, I've structured the confidence level specifically to handle this. If I only make speculative, hedged predictions, that will show up in the tracker. You'll see that my high confidence category is empty. That's its own signal. It tells you I'm not willing to take strong stances. Second, there's a balance I'm trying to strike. Vague predictions are useless. Silver might go up or down isn't analysis. So there's a floor on how hedged I can be while still providing value. But wild predictions are also useless if they're wrong all the time. Silver to 500 by Friday gets attention, but it destroys trust when it doesn't hit. The sweet spot is predictions that are specific enough to be useful, but grounded enough to be realistic. Predictions that challenge the consensus when the data supports it, but don't claim certainty I don't have. Third, and most importantly, my goal isn't to have a perfect track record. My goal is to have a transparent track record. I will be wrong, repeatedly. Markets are complex. Unpredictable things happen. Anyone who tells you they're never wrong is either lying or deluded. The question isn't whether I'll be wrong. The question is what I do when I'm wrong. And my commitment is to own it, analyze it, and learn from it, publicly. That's the accountability that builds trust, not perfection, honesty. Let me give you a concrete example of how this plays out. Let's say in 3 months, one of my high confidence predictions misses badly. Silver goes the opposite direction from what I expected. Here's what I'll do. First, I'll update the tracker immediately. No delay. No waiting to see if it reverses. The moment the time frame expires and the prediction is clearly wrong, it gets logged as a miss. Second, I'll make a video about it. I'll walk through my original thesis. I'll show you the data I was looking at when I made the call. I'll explain what I expected to happen and why. Then I'll analyze what actually happened. What did I miss? Was there data I ignored? Did something unexpected occur that my model didn't account for? Was my reasoning flawed? Or was the reasoning sound but the outcome uncertain? Finally, I'll tell you what I'm changing. How does this miss affect my future analysis? What will I do differently? What have I learned? This video won't be fun to make. Nobody likes admitting they were wrong. But it's the most valuable content I can create, both for you and for my own growth as an analyst. And you know what? I think the channels that do this, the ones willing to publicly confront their failures, are the ones that earn the deepest trust. Because anyone can look smart when they're right. The real test is how you handle being wrong. Let me give you a clear picture of what to expect from the Stat Guy. I'm not trying to replace every silver channel out there. I'm trying to fill a specific gap, the gap between urgency and credibility. Here's my content framework. First, weekly market analysis. Every week, I'll break down what's actually happening in the silver market. Not just price movements, the underlying data, COMEX inventory changes, registered versus eligible ounces, delivery notices and what they signal. Open interest patterns approaching first notice day. Shanghai premiums versus Western prices, LBMA vault flows, lease rate spikes. This is the structural data that tells you what's happening beneath the surface. Price is just the scoreboard. The data is the game, and I'll separate signal from noise. Not everything that happens in the silver market matters. Part of my job is filtering telling you what's worth paying attention to and what's just statistical noise or normal fluctuation. Second, deep research. When there's a significant claim circulating in the silver community, whether it's about manipulation, shortages, inventory issues, or anything else, I'll investigate. I'll find the primary sources, the actual filings, the raw data. Not screenshots of someone else's analysis, the original documents. Then I'll walk you through what I found. Is the claim accurate? Partially accurate? Misleading? What does the evidence actually support? This is labor-intensive work. It's not as flashy as making bold predictions, but it's the foundation of credible analysis. Third, fact-checking. When a viral claim sweeps through the silver community, I'll verify it. I'll trace the claim back to its source. I'll check whether the data supports it. I'll give you a clear verdict. Confirmed, partially true, misleading, or false. This isn't about attacking other creators. It's about serving you, making sure you have accurate information to make decisions. Fourth, transparent predictions. You already know this one. Every prediction tracked, every result logged, every miss analyzed. This is the backbone of the channel. Everything else builds on this foundation of accountability. Fifth, independence. I'm not a silver dealer. I don't have inventory to move. My revenue isn't tied to you buying silver. This matters because it means I can tell you things that silver dealers can't. I can say, I think silver's due for a pullback. Maybe wait before adding to your stack. I can say, this particular narrative seems overhyped based on the data. I can be bearish when the data warrants it. I don't have to be bullish every video because my business model depends on it. My business model depends on being accurate and trustworthy. Those incentives are aligned with your interests. If I ever do sponsored content or affiliate partnerships, I'll disclose them clearly. You'll always know when money might be affecting what I say. No hidden agendas. Sixth, respect for your intelligence. I'm not going to talk to you like you're an idiot. I'm not going to use fear to manipulate you. I'm not going to pretend I have secret information that they don't want you to know. I'm going to treat you like an intelligent adult who can handle nuance, complexity, and uncertainty. I'm going to show you my reasoning, not just my conclusions. I'm going to trust you to make your own decisions based on the information I provide. This might mean my content is less viral. Nuance doesn't spread like fear. Complexity doesn't get shared like simplicity. But I'd rather have a smaller audience that trusts me than a larger audience that I've manipulated. Now let me tell you what this channel is not. This is not a channel that will tell you exactly what to do. I'm not your financial advisor. I don't know your situation, your risk tolerance, your timeline, your goals. I can provide analysis. The decisions are yours. This is not a channel that will make you feel good by confirming what you already believe. If the data contradicts a popular narrative in the silver community, I'll say so. I'm not here to tell you what you want to hear. This is not a channel that will give you the emotional satisfaction of us versus them content. I'm not going to spend hours ranting about evil bankers without evidence. I'm not going to attribute every price move to manipulation. Sometimes prices go down because more people want to sell than buy. That's how markets work. This is not a channel that will create false urgency. Every video will not be an emergency. Every week will not be the most important week ever. When something significant happens, I'll tell you. When the market is quiet, I'll tell you that too. And this is not a channel that will pretend to have certainty I don't have. I will be wrong. I will have gaps in my knowledge. I will make mistakes. The difference is that I'll acknowledge these limitations openly rather than pretending they don't exist. All right, enough talking about accountability. Let me demonstrate it. I'm going to make my first official trackable prediction right now. This goes in the tracker immediately after this video goes live, but I'm not just going to give you a number. I'm going to walk you through my process, show you exactly how I'm thinking about this, because the reasoning matters more than the conclusion. Let me pull up some data. First, let's look at COMEX registered silver inventory. This is the silver that has been officially designated as deliverable against futures contracts. It's sitting in COMEX approved warehouses. It's been assayed, tagged, and certified. This is the metal that theoretically backs the paper market. As of my most recent data pull, and I'll put the source and date on screen so you can verify this yourself, COMEX registered silver stands at approximately X million ounces. Now, let me give you historical context. In 2020, registered silver was around 340 million ounces. In 2021, during the Wall Street Bets silver squeeze attempt, it briefly spiked higher as metal flowed into the system. Today, we're at a fraction of that. The registered category has been systematically drained over the past several years. Here's the trend line. I'm showing you the actual data from CME Group pulled from their daily reports. This isn't secondhand. This isn't a screenshot from another channel. This is primary source data. What do you see? A clear downtrend, not a straight line. There are fluctuations, but the overall direction is unmistakable. Now some people look at this and scream, "Squeeze imminent," They see low inventory and assume the system is about to break. Others dismiss it entirely. Inventory always fluctuates. This doesn't mean anything. The system has flexibility. I think both of these takes are too simplistic. Let me explain why. The alarmist take misses several important factors. First, COMEX can settle contracts in cash. If they truly can't deliver metal, they have mechanisms to settle financially. It's not ideal, but it's an option. Second, eligible silver, metal in the warehouses, but not yet designated for delivery, can be converted to registered relatively quickly. There's a buffer. Third, the market has survived low inventory before. Low inventory creates pressure, but pressure isn't the same as collapse. The dismissive take also misses important factors. First, the trend matters. It's not just that inventory is low, it's that inventory has been declining consistently for years. That's not random fluctuation. That's a persistent flow out of the system. Second, delivery demand has been elevated. More contracts are standing for physical delivery than historical norms. That's someone, or multiple someones, preferring metal over paper. Third, the context is different now. Industrial demand for silver is higher than ever. Solar panels, EVs, electronics, the structural demand picture has shifted. So what's my actual view? I think the silver market is under moderate structural pressure, but we're not at crisis levels yet. The inventory situation is genuinely tight by historical standards. Delivery demand is elevated. The long-term demand picture is supportive. But I also think the system has more resilience than the most alarmist takes suggest. The buffer of eligible silver exists. Cash settlement mechanisms exist. We could see ongoing tightness without seeing an actual delivery failure. My base case is continued pressure on inventories, elevated volatility, and a general upward bias in prices, but not a dramatic moonshot in the immediate term. Now, let me translate that into a specific, trackable prediction. Here it is. Prediction number 1. Silver spot price will close above specific number dollars per ounce at least once during the next specific time frame. Let me fill in the details. I'm predicting that silver spot will close above $36 at least once in the next 45 days. Time frame, 45 days from today's date, which I'll specify exactly in the tracker. Confidence level, moderate. Let me explain why moderate rather than high. The factors supporting this prediction. Inventory trends remain tight. Seasonal demand patterns are supportive. Technical levels show building support. Industrial demand continues to grow. And we're approaching a period where delivery cycles could add pressure. The factors creating uncertainty. Broader market volatility could pull silver lower in a risk-off environment. Dollar strength could pressure commodities generally. And we've seen silver reject similar levels before without breaking through. On balance, I think it's more likely than not that we see 36 during this window. But there are legitimate scenarios where I'm wrong. That's why this is moderate confidence, not high confidence. What would prove me wrong? If silver breaks below specific support level, let's say $31 on high volume, that would indicate the bullish thesis is failing. It would suggest sellers are in control and my timing is off. Now, I want to be extremely clear about something. This is not financial advice. I'm not telling you to buy silver. I'm not telling you to sell silver. I'm not telling you to do anything. I'm sharing my analysis and making a prediction that I will be held accountable for. What you do with this information is entirely your decision. You know your financial situation. I don't. All I'm committing to is transparency. In 45 days, we'll know if this prediction hit or missed. And either way, I'll do a follow-up. If I'm right, I'll analyze why. Was I right for the right reasons? Did the outcome happen the way I expected? If I'm wrong, I'll analyze why. What did I miss? What should I have weighted differently? What will I change going forward? That's the accountability promise in action. And here's the thing. This is just the first prediction. Over time, there will be dozens, maybe hundreds. You'll be able to evaluate my track record with real data. 6 months from now, you won't have to take my word that I know what I'm talking about. You'll be able to check. Let me zoom out for a second. Why am I building this channel? What's the actual point? It's not just because I like silver. I do like silver. I think that's one of the most interesting and misunderstood markets in the world. But that's not enough to justify the time and effort this takes. It's because I believe the silver community deserves better than what it's getting. I've been part of this community for years. I've seen the forums. I've read the posts. I've watched the videos. And I've seen how the information ecosystem has degraded. There's a lot of noise, a lot of hype, a lot of fear-based content designed to get clicks rather than informed decisions. And the people who suffer most are regular stackers. People who are trying to protect their families, build generational wealth, hedge against uncertainty. They're drowning in conflicting information. They don't know who to trust. They've been burned by predictions that didn't pan out. These are good people. They deserve good information, and I think there's a gap in the market. There's room for someone who combines urgency, because silver markets are genuinely interesting and sometimes move fast, with accountability, someone who makes specific calls and tracks them publicly, someone who shows their work and admits their mistakes. That's the niche I'm trying to fill. I'm not trying to be the most exciting silver channel. I'm not trying to get the most views. I'm trying to be the most trustworthy. And I think, over time, trust wins. The creators who cry wolf every week eventually lose their audiences. The endless emergency gets exhausting. People tune out. But the creators who build genuine credibility, who are honest about uncertainty, who own their mistakes, who consistently provide value, those are the creators who endure. I'm playing the long game. I'm building something that compounds over time. Every accurate prediction adds to my credibility. Every honest post-mortem adds to trust. Every piece of careful analysis reinforces the foundation. It's slower than hype. It's less viral than fear. But I think it's more durable. And here's what I've come to believe. The silver community is hungry for this. They're tired of being manipulated. They're tired of being let down. They want someone they can actually rely on. I might not be that person. My track record might turn out to be mediocre. The market might humble me over and over, but at least you'll know. The tracker will show you. And you can make an informed decision about whether my analysis is worth your time. That's the deal. That's the social contract. Full transparency in exchange for your attention. All right, if you've made it this far, you're exactly the kind of person this channel is for. You're not looking for hype. You're not looking for someone to tell you what you want to hear. You're looking for something you can actually trust. Here's what I want you to do. First, subscribe. If this approach resonates with you, if you want data-driven analysis with real accountability, hit that subscribe button. Turn on notifications so you know when new content drops. I'm going to be releasing weekly breakdowns, deep research pieces, and follow-ups on my predictions. If you want to stay in the loop, you need to subscribe. Second, drop tracker in the comments. I rate every comment on this channel, seriously, and I want to know who's watching, who's here for the accountability angle, who actually cares about this approach. If you made it to the end of this video, drop tracker in the comments. It tells me you're paying attention. It tells me you're the audience I'm building this for. Third, check the pinned comment. I'll pin a link to my prediction tracker in the comments of every video. Bookmark it. Check it regularly. Hold me accountable. That's the whole point of this system. It only works if you use it. If you see a prediction that didn't hit and I haven't logged it, call me out. If my analysis doesn't match the tracker, call me out. You're my accountability partner. This works because you're watching. Fourth, share this with someone who needs it. If you know someone who's been burned by silver predictions, someone who's frustrated by the noise in this space, share this video with them. Let them know there's a different approach. The silver community grows stronger when we raise the standards, when we demand accountability, when we stop rewarding hype and start rewarding honesty. You can be part of that shift just by sharing this video. Here's what's coming on this channel in the next few weeks. Next video, I'm doing a deep dive into COMEX data. 6 months of inventory movements, delivery notices, and open interest patterns. I'm going to show you exactly how I analyze this data and what it tells us about market structure. This is the research that supports the prediction I just made. You'll see my full methodology. After that, I'm going to fact check one of the most viral claims circulating in the silver community right now. I'm going to trace it back to primary sources and give you a clear verdict on whether it holds up. Then, my first weekly market breakdown. What happened in silver this week, what mattered, what was noise, and what I'm watching next. This is just the beginning. The content calendar is full, the tracker is live, we're building something here. The silver market doesn't need more predictions. It needs more accountability. It doesn't need more urgency. It needs more honesty. And it doesn't need more voices claiming certainty they don't have. It needs more analysts willing to say, I don't know, when they don't know. That's what I'm trying to build here. A different kind of silver channel, one where the predictions are tracked, the data is sourced, and the mistakes are owned. I'm not promising I'll be right. I'm promising I'll be transparent. And over time, you'll be able to evaluate for yourself whether my analysis is worth listening to, not based on charisma, based on results. This is the Stack Guy, data-driven, accountable, independent. The tracker is live. The predictions are public. Thanks for watching. I'll see you in the next one.